Tuesday, a financial deal for retirees that could increase your income. Stuart Welch is a financial planner. He joins us here on Good Day Alabama every Tuesday. He's talking about reverse mortgages today. It's good to see you.
Good morning, Rick.
A topic that we've touched on before here on Good Day Alabama. In a nutshell, reverse mortgages work for people who are, those retirees out there who are looking to kind of boost their income, right?
Yeah, I think when you think of a reverse mortgage, when you think of a regular mortgage, you're making a payment to the mortgage company.
Right.
And a reverse mortgage, it's the opposite. The mortgage company is making a payment to you, and there's no tax associated with that. And it's really kind of a perfect situation for someone who needs more cash flow in retirement, and for sure wants to stay in their home. So you have to be 62 in order to qualify, and that's how a reverse mortgage works.
Okay, you say FHA has actually changed up a couple of things. There's some new stuff going on out there when it comes to reverse mortgages, right? Yes,
they're governed by FHA. So, there's been this thing going around, is reverse mortgage really legitimate? And the answer is that it is legitimate. It is governed by the FHA. And one of the things that they're doing is they're saying if you're willing to take 20% less than what you actually qualify in terms of the mortgage, they'll waive their upfront insurance fee, and that'll save you about 2% on closing costs. So on a $100,000 loan, that would actually save you $2,000. So that's a pretty big deal.
Okay, so that kind of throws a new twist into this, throws a little bit more incentive in all of this. Okay, what's the risk? Are there any downsides? We've talked about this before. Who is sitting here listening to it in that age range, who shouldn't be doing this?
Well, I think if you have plenty of assets in retirement, then you might not do this because you are obviously encumbering your house. So if you don't need the cash flow, you wouldn't do this. But if you do need the cash flow, this is a good option. So here's an example. Let's say it's you're 65 years old, you need cash flow, you're living primarily on Social Security, maybe a small pension. All of a sudden you do a reverse mortgage, you start getting this cash flow in, and you get it as long as you're in the house. So if you lived 100, you'd still be getting that cash flow. And there is no risk. If you took out more than the value of the house, that risk is actually being borne by the mortgage company. And the one thing they do to protect themselves is the amount of loan that they'll give you is only about 50, maybe 60% of the value of the house. So they try to leave themselves some protection there.
Interesting way to look at it. Hey, it's always good to see you. Let's mention this. We open up the money mailbag from time to time here on Good Day Alabama. Send us an email with your question about anything from retirement funds to investing, financial planner. Stuart Welch will answer it. It might be reverse mortgages, more clarification on that. GDA@WBRC.com, or go to Good Day on Facebook or Twitter. Ask your questions. We'll deal with them on the air. Good Day continues in a moment.